Good day. Welcome to another session of Fog Accountancy Tutorials. In our previous video, we studied how to prepare the final account of partnership by going through the format of the profit and loss appropriation account, and also we learned how to prepare the partner's capital account and the partner's current accounts. Now, in this video, we are going to continue by taking a practical example, and then we'll try and look at how this works. And so without wasting much time, let us look at a question and prepare final accounts for partnership business. Equia, Ama, and Dede are in partnership running a garage business. Included in their partnership agreement are the following terms. 1. Profit and losses are to be shared among Equia, Ama, and Dede in the ratio 4:3:2. So that is the profit and loss ratio. Interest on capital is allowed at the rate of 5% per annum. Ama, acting as the administrative manager, is entitled to an annual salary of 8,000 Ghana cedis. On 1st January 2018, their capital and current account balances were as follows. So for Equia, Ama, and Dede, we have their capital accounts balances for 72,000, 40,000, and 24,000 respectively. And for the current account balances, we have 24,000 for Equia, which is a debit balance, and then Ama's balance of 3,200 is a credit balance. And then Dauda has 1,500 credit. So with the debits for the current account, it means that they have done more drawings than necessary. So it's not supposed to be, it's not the usual balance. So we are going to make sure that they have their balances where they are supposed to be. That is with that. By mutual agreement, the day on 1st July 2018 increased her capital by paying a further 6,000 Ghana cedis into the partnership account. Equia reduced her capital by 8,000 Ghana cedis, but kept this in the partnership as a long-term loan, attracting interest at 10% per annum. Interest on loan is to be credited to the current account. We continue. The partners' drawings and interest charged on drawings during the year ended 31st December 2018 were as follows. We have for Equia 17,000, and then for drawings, Equia, Ama, and Dede has 17,000, 11,000, and 6,000 respectively for drawings. And then we have interest on drawings 900, 600, and 300 respectively. Fortunately for us, this figure has been calculated for us, and so it's not going to be a problem. Then we have the trading profit before interest on the garage business for the year ended 31st December 2018 was 49,350 Ghana cedis. You are required to prepare A. Profit and loss appropriation account, B. Partner's current account, B. Partner's capital accounts, C. Partner's current accounts, and then D. The statement of financial position of the partnership firm as at 31st December 2018. Okay, so we'll look at the question. So this is a very simple question. We are supposed to prepare profit and loss appropriation account, partner's capital account, and then the current account as well. Now, take note that we have been given a percentage to calculate. I told you that they will give you the items of the partnership agreement. And one of the things we have been given is the capital account, interest on capitals, the percentage for interest. For interest on drawings, we are fortunate that it has been calculated for us in the question. So we are giving the figure straightforward. Now, if it was the other way around, we would have been given a percentage to calculate interest on drawings. So when you meet a question like that, you should know that you calculate it by yourself. Okay, so in this case, what we are going to do is to calculate our interest on capitals. When you get a question, do your calculation of interest on capitals first, Then you do your calculation of interest on drawings. Now, if there is any interest on loan, you have to work that out as well. Then from there, you can proceed and then prepare your profit and loss appropriation account. Okay, so let us try and find our interest on capitals for Equia, Ama, and Dede. And so we'll begin with the workings. So interest on capitals, that is the first one we are going to look at. Interest on capitals. And then we'll begin with that of Equia. Now, we are going to work our interest on capitals and we're going to begin from Equia. So that is the first thing you should do. You should work your interest on capitals. Now, Equia's capital as at 1st January 2018 was 72,000. So if there is any interest, the question says that if there is any interest to calculate on Equia's capital, it should have been on the 72,000. And the interest on capital is allowed at 5%. But then we are told in the question that Equia reduced her capital by 8,000 Ghana cedis on 1st July 2018. But she kept it in the partnership as a long-term loan. Let us forget about the loan component. Let us think about the capital because we want to calculate our interest on capital. We cannot give the interest on capital, which is 5%. It's supposed to be per annum. And so we cannot give interest to Equia on capital that did not exist in a year. Now, from the beginning of the year, Equia's capital was 72,000. In the middle of the year, Equia took out 8,000 of the capital. It means that Equia will be left with 64,000 from 1st July till the end of the year. Now, what do? If we calculate the 5% on the 72,000, you would be cheating the business because the partner reduced the capital. And if you calculate on the 64,000, you'll be cheating Equia because at least the 72,000 was there for 6 months. And so this is what you have to do. You have to calculate for 72,000 for the first 6 months and then the 64,000 for the next 6 months. And so what you have to do for interest on capital in Equia is going to be 5% on the 72,000 Ghana cedi times 6/12. So 6/12 here means that it was there for 6 months out of the 12 months because 1st July means that this money was there in the business from 1st January to 30th June. That is 6 months over 12. And then you have an answer for that. And that will give us 1,800 Ghana cedis. And then we will still calculate 5% of the new balance, which is 64,000. That is 72,000 minus the 8,000. Then that will also be multiplied by 6/12 because that was also there for the next 6 months. That was the value. So, and that will give us 1,600 Ghana cedis. So we'll add these two figures and then we are going to have 3,400 Ghana cedis. And ladies and gentlemen, this is going to be the interest to be paid on Equia's capital. Now, if you pay directly 5% on 72,000, you would have gotten 3,006. That would have been an overpayment. If you also pay only on the 64,000, you are going to get 3,002. That is also an underpayment. So you need to use the proportion method for the number of months that the capital was in the business, and then use that to calculate the interest on capital for Equia. I believe we are okay with that. And then we move to Ama. Now, interest on capital for Ama. Ama's capital at the beginning of the year was 40,000 Ghana cedi per the question. Now, there was no mention anywhere that Ama added any extra capital or reduced. And so we calculate for the full year for Ama. There will be no percentages or fractions in terms of the months because it's 12/12. And so that will give us 2,000 Ghana cedis as Ama's interest on capital. So for the year, Ama's interest on capital is 2,000 Ghana cedis. And then finally, we move to that of Dede. Dede's capital at the beginning of the year is 24,000 Ghana cedis. Now, we are told that by mutual agreement, Dede on 1st July 2018 increased her capital by paying a further 6,000 into the partnership. So that is also at the same date when Equia also made the reduction in capital. And so it means that for 6 months, the day's capital was 24,000. And for the next 6 months of the same year, the day's capital was 24,000 plus 6,000. That is a 30,000. And so the same procedure that we use to calculate for AMA, we are going to use for the day. And so for the first 6 months, it will be 5% of 24,000 times 6 over 12. 5% of 24,000 times 6 over 12, which is going to give us 600 Ghana cedis. And then we will still calculate 5% of the new figure after 6 months, 30,000. Still times 6 over 12. And that's going to give us 750. And so when we add up these two, we are going to have a total of 1,350. And that is going to be the day's interest on capital for the year. Now, the next thing to calculate would have been the interest on drawings. But then we are told that the interest on drawings, we are giving that straight away. Equia is 900, that of AMA is 600, and that of the day is 300 Ghana cedis respectively. And so we are not going to calculate for that. And so there is no other thing to calculate, so we can straight away go onto the format. But remember that Equia's reduction in capital of 8,000 was kept in the business as a long-term loan. Now, we are fortunate that the question told us that the interest on loan should be credited to the current account. Okay, so it means that 8,000 that is kept in the business by Equia as a loan. Now, without a partnership agreement, it would have attracted a 5% interest. But now, the agreement is saying that they are going to pay Equia 10% interest on the 8,000, and so we have to find the 10% interest on the 8,000 as the interest on loan, and then we are going to treat that as well. So that is what we are going to do. So the working two will be on the interest on loan for Equia. Now that will be 10% of 8,000 Ghana cedis, and then you also have to take note that this 8,000 Ghana cedis was not secured at the beginning of the year. It was in the middle of the year that she converted the value of her capital into loan. And so you have to apply your fraction 6 over 12. Other than that, we will overpay her what is due. And so 10% of 8,000 times 6 over 12 is going to give us 400 Ghana cedis. And so the interest on Equia's loan for the year will be 400 Ghana cedis. And ladies and gentlemen, from here we can proceed to prepare the profit and loss appropriation account, and then the current account and the capital account as well. Okay, so that is what we are going to do for now. We are going to prepare the profit and loss appropriation account. Now the profit and loss appropriation account, okay, so profit and loss appropriation account for the year ended 31st December 2018. Now this is what we have to do. Remember that the question has already given us the net profit to begin with, but the interest on loan, okay, the interest on loan should be adjusted on the profit first before we begin the appropriation account. You can decide to do that as workings, or you can decide to do that adjustment before you begin with the normal way of preparing the profit and loss appropriation account. And so you first have to, because the reason is that interest on loan is an operating expense. It's not about the partnership. Forget about the fact that it was the partner who gave the loan. Treat it like any other loan. And once there is interest on loan, it's an operating expense. And so you have to subtract that from, it has to be part of your profit and loss account to arrive at your net profit, even before you come to the appropriation. And so we have to do an adjustment of the profit by subtracting the interest on loan. That is the first treatment of the interest on loan. And then when we get to the current account, the second treatment is that we'll be crediting that to the partner involved who gave the loan. And so we have to do an adjustment of the profit first before we begin the profit and loss appropriation account. And so we can just see net profit reported. The net profit reported was 49,350 according to the question. And then we less our interest on the loan. The interest on loan is 400, and so we are going to have 48,950 as our adjusted profit. So you have to show this as a working, or you can just adjust it straight away before you begin your account. So this is our third workings, the adjustment of the profits. Okay, so straight away we can come here and begin with the net profit for the period, and we are going to pick the adjusted profit. So the net profit is 48,950 Ghana cedis. And then according to the format that I gave in the previous video, what do we do next? From here we add our interest on drawings, and so we add interest on partners drawings. Now with the interest on drawings, we have that for Equia to be 900, and then that of Ama to be 600, and that of Dede to be 300. So when we add that up, we have 1,800 for the interest on drawings. And when we add to the profit, we are going to have a total of 50,750. And then we will less our interest on capitals. Very, very simple. So interest on capitals, we less that. And so we are going to have that for Equia, and the interest on capital for Equia was 3,400. So 3,400, and that of Ama was 2,000 Ghana cedis, and that for Dede was 1,350. And so when we add up these three, it will give us the total interest on capitals. It's 6,750. 6,750. Let me put that in bracket to show that we are taking it off. And then we will ask whether there is any partner's salary. Now, according to the question, Ama is administrative manager and is entitled to a salary of 8,000 Ghana cedis per annum. And so, now take note, if the salary was given to you per month, you would have multiplied by 12. It was given to you per week, you would have multiplied by 52. So you have to take note. This is per annum. And so partner's salary for Ama, 8,000, will also be subtracted. And so when we take out the interest on capitals and the partner's salary, we are going to have our residual profit. A residual profit of 36,000 Ghana cedis. That is your residual profit for the partnership business for the year. So you can put an underline for that. And once you have your residual profit, you share according to their profit and loss sharing ratios. And so the next stage, you see share of profits. And with a share of profit, you use their profit and loss sharing ratios. Now, the ratio for sharing profit or loss is 4:3:2. And so that gives us a total ratio of 9. And that means Ama is having 4/9 times the profit of 36,000. Equia is going to have 3/9 times 36,000. And then finally, Dede is going to enjoy 2/9 times 36,000 of the profit. And that is going to give us 16,000 for Ama, 12,000 for Equia, and then 8,000 for Dede. And the total will still be 36,000 Ghana cedis. Ladies and gentlemen, this is how you prepare the profit and loss appropriation account. Okay, so now that we have been able to prepare the profit and loss appropriation account, the next requirement is the partners capital accounts and the partner's current accounts. And so we have to prepare the capital accounts for the partners and the current accounts for the partners. I may clean this before I prepare just to get the space on my board. But remember that in the exam you need to refer to this to prepare, especially the current account. Take note, because almost all the things that we added to the profit will be now deducted from the current account balances. These ones will rather be added to the partners, the one with less. So we take out of profit, we go and add in the current account. We add to profit, we go and less from the partner's current account. So that is the relationship between this account and the partner's current account. And so we are going to use this account to prepare the partner's current account. But because of the space on my board, I'm going to clean that, and then we are still going to prepare. We'll be fine. Okay, so let us quickly prepare the partner's capital account, and then we are going to prepare the partner's current account as well. Remember that this partnership is maintaining the fixed capital account system, and that is why they have the current account as well. Now, the fixed capital account does not mean that the capital will not change outrightly. What it means is that adjustments or additions like and subtractions like drawings, interest on capitals, and all those interest on drawings will not be adjusted on the capital itself. But when there is a complete capital withdrawal or an additional capital introduced, that will still affect the capital account balance. And so the capital account that we are going to do is going to cater for only two things: the additional capital introduced by one of the partners and the capital withdrawal that was made by another partner. These are the only two things that we are going to adjust in the capital account, nothing more. Now, when it comes to the current account, that is where we are going to factor the items of the profit and loss appropriation account. And so let me quickly prepare that. I can do that simultaneously. So let me do for the capital accounts of the partners. Let me just try and okay. So we prepare this in a columnar form, and then we call it capital accounts. I always emphasize that my students should add the S, because these are three accounts in one. So you put the S there to show that you are working in the plural form. So Equia, Ama, and Dede. Equia, Ama, and Dede. You put your currency signs where they belong. Make sure you show the currency signs to tell the examiner which currency you are working in. And then you begin with the account. Now, you always begin with your balance brought forward. And so the balance brought forward from 1st January was 72,000 for Equia, 40,000 for Ama, and then 24,000 for Dede. And then what we do is that we'll now make adjustment to the additions and then the withdrawals. We realize that Equia made a withdrawal, capital withdrawal of 8,000, but kept it in the business as a loan. And so you come to the debit side of Equia's capital account, because in the capital account setting, when you debit, you're only reducing the capital. So you debit Equia with 8,000 to reduce the 72,000, and then you call it a loan. Now, take note that I'm calling it loan because Equia kept it in the business as a loan. Now, there could have been a situation where she was taking the money away. I would have written cash or maybe bank, depending on the means of payment. And so take note. And then also, did they introduce additional capital of 6,000? And so I can call that cash, and that will be 6,000 Ghana cedis. And ladies and gentlemen, this is all we are going to do for the capital account. There is nothing more to add up, because this is a fixed capital account. So straight away, we'll balance off the account. And so we'll find the totals for both sides, like the way we balance any other account. And the total for Equia will be 72,000, giving us a difference of 64,000, which we already established when we were calculating the interest on capital. And so that will be our balance carried down for a QS account. When we come to AMA, nothing happened with AMA's capital. So the balance remains the same as 40,000. Then when we come to the day increase the capital, so it moves up to 30,000. So the balance carried down on the day's capital will now be 30,000 Ghana cedis. And then we will see balance brought down 64,000 for Equia, 40,000 for AMA, and then 30,000 for Dede. This is how the capital account is going to look like. I'm sure you really understand what I've just explained. So from here, we'll use the same format to prepare for the current account as well. So I'm sure I can clean the board for us to continue with the current account as well. Okay, so using the same format, what I've done is that I've just changed the capital to current, but it's the same format. And I maintain the names, Equia, AMA, and Dede for both the debit and the credit side. So we begin the current account as well. Now, take note that I said that it is not always the case that the current account will all have a credit balance for both all of them. Some may have a debit balance, so you always have to be careful when you are solving a question. Now, in this question, we are told that the current account balances from the beginning of the year was 2,400, a debit balance for Equia, but 3,200 as a credit balance for AMA, and 1,500 as a credit for Dede. And so we are going to have credit balance for both AMA and Dede, but a debit balance for Equia. So the balance brought forward for Equia at the credit side does not exist. And so we have 3,200 for AMA and then 1,500 for Dede. And then we'll have another balance brought forward, this time for Equia, at a value of 2,400. So for the current account balance, it's not like the capital account that will always see a credit balance. There could be a debit balance as well. So let us take note. So there will be a balance brought forward. Now we will go straight into your appropriation account. This is why I love to make the students, to make the topic easy for my students. Go into your profit and loss appropriation account. Now the things you added to your profit will be debited into the current account. And then once you took out of your profit, will be credited to the account. So we added interest on drawings. And that means that interest on drawings is reducing their balance. And so we'll come and debit your interest on drawings. So that is what you do. Now, interest on drawings is 900, 600, and 300, respectively, for the three of them. So that is, you debit your interest on drawings in the current account, because it's reducing their current account balance. They are paying it to they are paying the interest on drawings to the business, and the business is taking it. So they are adding to their profits. That is why we added to the profit to be shared, but then we are taking it out from that of the partner's current account. And when we come to the credit side, remember that interest on capitals was reduced from the profit because the business is paying to the partners. And when the business is paying to the partners, these are accounts of the partners, so they are receiving. So they credit the account to show that they are receiving because this has a credit balance. And so interest on capitals will be credited to the current account to show an increase in their current account balance. And for the interest on capitals, Equia had 3,400, AMA had 2,000 exactly, and then there was 1,350 for the day. Okay, and then also there was a salary. AMA was taking a salary, so we have to credit for AMA alone. So salary of 8,000 was being paid to AMA, so AMA is receiving that. So we credit AMA's current account with 8,000 to show that AMA is taking the salary. Then from there is nothing more. Then we look at the share of profit as well. When we share the profit, it is still coming to the partners. This side is a side where the accounts are increasing and the debit side is reducing the account. And so we'll say share of profits. And the share of profits was 16,000, 12,000, and 8,000 respectively for the three of them. Then let us take note that there was an interest on loan. Equia reduced the capital but kept it in the business as a loan. And so there was an interest on loan of 400. That was supposed to be for Equia. And so Equia's interest on loan will also be credited to her capital account. Her current account. And it's at a value of 400. None of them receives any. So that is how it's supposed to be done. So make sure that when you are preparing the current account, everything that you need to increase their balances will be credited. Then everything that is reducing their balance will be credited. So it is almost like whatever it is in the appropriation account is what we have transferred into the current account. There is one more thing that is not in the appropriation account, which should be in the current account, and that is drawings itself. Now, interest on drawings is in the appropriation account, but drawings is not in the appropriation account. But when you are preparing the current account, you need to factor both interest on drawings and drawings itself. But then in the appropriation account, we did not factor drawings. And so we have to take out drawings because drawings is going to reduce their balances. So the only thing that I am bringing here that we did not factor in the appropriation account is drawings. And so you have to take note of that as well. According to the question, Equia made drawings of 17,000, so we debit her account. Amma made drawings of 11,000, and then finally, they also made drawings of 6,000 Ghana cedis. So this is how the current account is going to look like for the partners. And so, having prepared this, then we can also balance off the accounts and then look at their current account balances. And so usually it's good to leave a line before you rule off because you cannot tell where their balance brought downs or carry downs are going to be. And so you rule off and then you find the totals. You balance each of them separately. Now for Equia, the debit side of her account looks more than the credit side still, because when you add up the debit side, you have 2,300. But when you add up the credit side, you have 19,800. And so we are going to put 20,300 at both sides. And then the difference will be 500 Ghana cedis. We call it our balance carried down. And that means that this balance carried down will appear on the debit side down here as a balance brought down of 500 for Equia. So Equia still has a debit balance on her capital account. On her current account. And then we move to Amma. Amma's credit side is more than the debit side. So Amma is going to have a credit balance as well. And so the total of Amma's credit side is 25,200. So we put that there and we have to put the same amount here. And then we'll find the difference and we call it balance carried down. Now the difference is 13,600. So that is what we need to make it balance. So it will be a balance brought down of 13,600 on Amma's current account. And then finally we balance that of the day. Now the day is also going to have a total of 10,850 at the credit side, which is more than the debit side. And so what we have to do is to find the difference. And the difference will be the balance carried down. Now the difference will be 4,550. That is the balance carried down on the day's account, which is going to appear down here as a balance brought down. So ladies and gentlemen, this is how the current accounts are going to look like for the partners. Okay. And then finally, we are told to prepare statement of financial position. Now, looking at this question, there were no assets given to us. We were not given any assets and liabilities in the question. The only liability we have is the loan, which was converted from capital. We don't have any assets to prepare this statement of financial position. So I'm sure the examiner just wants you to show how these items will appear on the statement of financial position. This is more like an extract, and so the difference will still be called total assets. And so that is what we are going to do. We are going to show how this will appear on the statement of financial position. And so I'm going to clean off this, and then we'll prepare the statement of financial position as an extract. Okay, so we'll prepare the statement of financial position. So we'll say statement of financial position as at 31st December 2018. Now we don't know the assets, so let's just say total assets. So total assets, we'll come and put the figure down later. Then we move to finance by, because that is where we have to show. So we are going to finance this asset by. We are going to show how the capital and the current accounts will be arranged. So we'll start with the capitals. So we'll say capital accounts, just to show you how partners arrange their capital accounts in a financial statement. So it will be that of Equia, Ama, and Dede. So Equia is 64,000, Ama's capital is 40,000, and Dede is 30,000. So we'll add that up, and then we'll find our total capital. And the total capital is going to be 134,000. And then we'll come to current accounts. Now with the current accounts, we show their balances as well. Equia, Ama, and Dede. Now Equia's current account is a debit balance of 500. And so we'll put that here, but we'll put it in bracket because it is a negative balance. Now Ama's current account showed a credit balance of 13,600, and Dede showed a credit balance of 4,550. So we'll add that up to find our total current account balance, and that is going to give us 17,650. And so now that we have this, then we are done with the equity component of the account, and so we can look at the long-term liability as well, which is the loan that was given by Ama. So we will say loan from Ama, and that is 8,000 Ghana cedis. So when we add this, that will be our total equity and liabilities, and that is going to give us 159,650. So this is going to be total equity and liabilities, and that means that our total asset is also supposed to be 159,650. Now I didn't pick this figure anywhere. I'm just repeating what is here because it's more like an extract. The most important thing is that you are showing how this will appear in the statement of financial position. And so, ladies and gentlemen, this brings us to the end of the part 2 of final accounts of partnership. I'm sure you have understood a lot. If you don't understand anything, you can still ask me your question. I have given my WhatsApp number on the screens, and you can also follow us on our social media platforms, ask your questions, and we'll be ready to interact with you. Remember to subscribe to the channel. It's very important. Share this video. Let other people have a benefit of it. Let your friends, invite your friends to come and subscribe to the channel. Let us grow together. Let us learn together, and I'm sure we'll be successful together. Until we meet again another time, it's bye for now.